our retail investors, and I would say retail traders, okay, because we've analyzed the data and we found that even IPO investments, the percentage of flippers within the first week. Let me just access the data. I love data, as you know. So the number of people who flip in the first week in any IPO for the NII category, right, which is the high net worth, etc., within the first week is 68%.
What?
Yes. And retail category, which is less than 2 lakhs, is 43%. So I think first we have to acknowledge that the IPO market is also a market of traders and not investors. Now, when such traders wish to take risk with their eyes open, we are not a nanny state. It's okay. You want to take risk, please take risk. We've looked at the main board IPOs from April 21 to December. In terms of listing day, out of a total of 50 odd issues, roughly speaking, 21-22, the ratio was 37 positive, 14 negative. 22-23, there were about 40 issues, roughly, 24 positive, 15 negative. And 23-24 to date, 47 positive, 6 negative. I think the important thing to note is that it's always a mixed bag. And therefore, the acknowledgement that IPO pricing is not, is at best a judgment of various players, and that it is not something which, which can go either way, let me put it that way. Now, the odds keep changing when the market is bullish, when the market is bearish, etc. But there are odds to be played here. So my belief, and I've said this before, is that the price discovery mechanism of IPOs is imperfect. And therefore, if a retail investor, not a trader, not the one who wants to flip on day 1 or day 7, because then you're a trader, you're taking the risk, you know the odds, upar bhi ja sakta hai, niche bhi ja sakta hai. If you're an investor, which means you want to hold for a reasonable period of time, then really speaking, why are you wanting to take this risk of upar bhi ja sakta hai, niche bhi ja sakta hai? Wait until the price stabilizes. Possibly wait until the first set of quarterly results come. There is no hurry and there is no impact cost for a retail investor. Now, institutions, if they want to wait and buy in the secondary market, there'll be huge impact cost. So I can understand an institutional investor wanting to come into an IPO, and they also have the wherewithal to independently assess the value. But for a retail investor, if you want to play the odds, come into the IPO market. Then if you win, good. If you lose, it's part of your gamble. But if you are an investor who believes in that company for the long term, then wait until price discovery is more efficient.